and welcome back to Big Gamma's 2-minute take. A look at the trade setup on the Ultra VIX short-term ETF, the UVXY. So let's jump in and take a look. First, I pulled off the term structure volatility on the VIX from last week to this week. You can see big time contango move here. Not only the big drop in vol generally, as you can see, moving down, but also short-term vol getting trampled on a lot more than longer-term vol. This is a negative to the UVXY. Really not per the roll per se, but the fact that they have to roll up to a future that's trading above the spot VIX that will then start to bleed back towards it. So indirectly, you kind of get hurt by that roll on the UVXY, which is a short-term 1.5 times so levered way to play long VIX here. So again, going into steeper contango is a definite negative for the UVXY. We can take a look at the chart here. You can see going back, this thing has just been decimated, down 6 days in a row, dropping from 30, now down to the lowest level it has really ever been in a very long time on the UVXY. I went back and pulled off the VIX expirations going back to the beginning of the year, highlighted in the green kind of aqua circles here. So this is VIX expiration, which was yesterday, which was the day we did the trade. You can see following VIX expiration, UVXY has tended certainly to pop up more than not on this, and sometimes in a fairly significant way, certainly on a percentage basis. So that VIX expiration many times puts a lot of pressure on the short-term volatility, which again drags down the UVXY. Once that VIX expiration goes away, a lot of times you will see that UVXY pop back up as that contango starts to steepen into more of a normal sort of contango curve as well. So probabilities, again, the fact that this thing has been down 6 days in a row, down sharply, trading at the lowest level we have seen in a very long time, and the fact that following every expiration on the VIX, we have seen some sort of move at least higher on this, I think sets up probabilistically for a long UVXY trade. So taking a look, I would simply look to go out to the November 23 calls, to that paying about 205 on these. You can see with the UVXY at 2206, the implied vol on these about 94. Now going back a week ago, the same moneyness options, right, roughly 1 point out of the money, we're trading at 105 vol. So you've seen the price of these options come down dramatically. Again, implied volatility, just a fancy way of saying the price of the option. And then 2 weeks ago, right, the implied vol on these, again, 1 point out of the money options at a 122 implied volatility. So not only have these gotten cheaper on an actual basis, obviously, but also a lot cheaper on an implied volatility basis. So I kind of like the probability setting up here. You're buying, UVXY calls at the cheapest level of implied volatility we have seen in a very long time. UVX has been down 6 days in a row, trading at the lowest levels it has been in a very long time. We've also seen that UVXY tends to pop after VIX expiration as a contango that steepens as expiration causes that, tends to then start to revert back and flatten. So I think probabilistically we can look for a pop in the UVXY over the coming weeks here. Also allows the fact that we can sell shorter term options against our long Novembers in this case to help defray some of that cost. So again, trading at the end of the day is all about probabilities, not certainties, but putting probabilities in your favor of the long haul, I think, is what leads to a long and profitable trading kind of situation. So until next time, as always, here's the good trading. Take care.